Hello everyone, welcome to the IchimokuCharts.com hourly analysis for the Aussie dollar US dollar FX for Tuesday, February the 22nd, 2011. Well, trading earlier today, the market tested down below the $1 level, and that could be quite significant for this market. We can see here that the market tested down to an area of previous resistance in an earlier hour of trading with a fairly indecisive type candle, a candle with a small red body. Small red body means that the sellers made net bearish progress, but the shadow on the bottom of the body represents buying coming in. So that set up this area at just below the even $1 mark at 99.85 as a potential area of good strong support. The market rallied from that area, failed to close down below there, which is quite significant, and it's what you'd expect for a round number. $1 is obviously the biggest number that you can have with this market, and failure to close down there meant that the market was certainly going to rally. Now the market did rally, but it tested this area of previous resistance when the market sold off significantly after a solid breakout down below the cloud, which is a bearish signal with Ichimoku charts, and then rallied to this area up around 100.45. And the market then sold off, tested down below the $1 level, failed to close down below there. The market then tested that area again of resistance just up above this dollar level and sold off in an even more significant manner with a larger red body candle. Now that red body set the market up to test down below the 99.85 region, and in fact we did test down around the 99.65, 99.70 area, and that's significant for this market and now becomes the major swing low and an important area of support. However, the market rallied from there with a bullish engulfing candle. We can see there that we had a previous trend and a green body engulfed the previous red body, and the market rallied significantly from there, only within the last few hours of trading to test this area of resistance again. So this area up above the $1 level, it extends roughly from around 100.3 up to around 100.45. So very significant area. If the market does break out up above that region, then we may see the market rally to test around the bottom of the cloud. So there's not a lot of decent resistance up above there, and the market, if it does break out above there, it will mean that the buyers have shown some good upside momentum that they failed to have previously, and it could be significant for this second time frame downtrend that the market's been in for the last few days on this hourly chart. Now what's important too is that the market is now testing above the Kijun-sen, and that could be quite important for this rally. If the market's going to maintain above this resistance, if it does break out above there, it will be a sign that the market is now beginning to build some momentum in the medium-term time frame again. Now, just looking at where the market is trading in relation, obviously, to the cloud, we're trading down below the cloud, so the market has an overall negative bias, so that's bigger picture terms on the hourly chart. But the market is also testing to trade up above the Kijun-sen. Now, remember, this final hour of trading here is not complete. This is actually live, so the market still hasn't closed up above that area. If it does close up above there, it could be fairly significant, but I'd like to see a fairly bullish close up above there for us to set up for an assault on the top of this resistance area. Now we can see here that the market was trading down below the Kijun-sen and Tenkan-sen for quite a period of time, so we had a decent amount of bearishness as the market sold off from up around 1.0155. That's all changed now with this retracement back towards the Kijun-sen. The market is reverting back to the mean as represented by the Kijun-sen in that medium-term time frame. The market's also trading up above the Tenkan-sen, which means that the market's bullish in that fast-term time frame as well. Now the overall bearishness in this market, however, is supported by the Chikou span, and if we look here at this grey line, it's trading down below the corresponding price action, so that's supporting the negativity in that higher time frame in the market. So for the next few hours of trading, we do need to watch this area of strong resistance for a potential test up above to the cloud around the 1.006 region, and certainly watch the low of the previous candle here, which is at 1.00172, for a potential retest of the $1 level, the round number. Certainly a test around the Tenkan-sen, which is just below that level, and then the support area at 99.85, and then down to 99.65.